Okay, we are live again, Friday, the 5th of September. Welcome to another episode of the Crypto Hour. So, as I told you last week, so I just got back the kind of early hours of this morning, so I don't have anything really prepared for you today, but we can look together at a few things. And also if you have, it's a really good occasion to start looking at any questions that you might have related to crypto, more widely on microeconomics as well. So if you have any questions, then fire them up. You can just unmute yourself and ask them, or put them in the chat. In the meantime, I'm going to go and have a look at a few things. Okay, can you see my screen first? No.
No, your backdrop.
Okay, there we are. Can you see my screen now?
Yes.
Okay, that's the forest, nice forest. Okay, so let me have a look at start with the calendar. So there's a couple of things to look up for this week. So again, I remind you, in general, we look at kind of jobs and inflation are the main focus at the moment. After the Fed over a week ago, we're talking about, they said they're focusing more on jobs now. We have to look at that a little bit more closely. So yesterday there was kind of like a tick, quite a sizable tick compared to what we've had in the past of unemployment claims. As you can see, the expectation was about 230, and now it was like 237. The non-farm employment changes is the private sector, is not the official figures that are going to be released today. But the non-farm employment change is a lot smaller than expected again, so showing continued pressure on the job market. Let's go and have a look on my FX book as well. So let's have a look, because that gives a little bit more some more granular look at the job numbers. If my internet behaves. Oh, okay. Look at the economic calendar. Yesterday. Okay, so if you look at this kind of like these numbers, is that yesterday we had these announcements. Okay, so non-farm productivity quarter on quarter is now actually turned negative. Okay, sorry, it turned slightly positive. Sorry, I was looking at it in the wrong way. But the initial jobless claims have picked up, but the continuous jobless claims actually kept being quite subdued, actually gone down compared to what was expected. So it's kind of like always this game in the job market, which shows increasing pressure from the point of view where there are now more layoffs. The layoffs are growing, but the continuing jobless claim it's determined as well by the amount of people that are still there looking for jobs, and the amount of people that have been sent away from the US, kind of like repatriated, so to speak, has reduced this number. That should probably be now well over 2 million if we had standardized figures as we had last year, and we didn't have the effect of Trump's policies for immigration. But definitely is this number here, that keeps pushing up, is the one that might push the Fed into making a cut of interest rates now in September. So going back here, today we have the non-farm payroll at 8:30 a.m. in kind of New York time. and so the markets have been very nervous, very volatile in this past few days. And this could be kind of like an announcement that could move the market quite substantially today. Waiting for, in the end, still the big announcement this month will be the interest rate, whether they cut in interest rates or not. That will come in a couple of weeks. There we are on the September the 17th. So will be Wednesday in 2 weeks time. And by the way, at the same day we'll have both the US and Canada reporting. The day after we have the UK, and on the Friday Japan. So in 2 weeks time there's going to be quite a lot of news related to government managing of the economy, so to speak, all across the world. Okay, so that's it. Go back. So again, I'll say today we might have a big move somehow in following this non-farm employment change, especially if the amounts reported it is substantially different from what we see here. Okay, a number lower would pretty much guarantee there's going to be an interest rate cut in September. The odds of an interest rate cut have been steadily growing over time, and it looks like almost as much as we can know what the Fed is going to decide. It's almost like given as a sure thing that they're going to cut interest rate in September. Now, from another perspective, though, sorry, this is Bitcoin at the moment. You see kind of like, by the way, kind of like how, oh, come on, how volatile even Bitcoin has been. Okay, so it's gone up from where we were when we met last week on the Friday. It dropped all the way down to 107, and then went back up to 112. Overnight, it went back down to 109, and now it's almost 113. It's almost like a very fast and strong moves. So this is like 3% in a few hours, and again it's and now as well from yesterday afternoon to where we are now, it's an extra, where are we, 3.2%. So very quick, very fast and furious moves. If we zoom out as usual, we can see that the demand zone that we had highlighted here has actually held. But at the moment we're still sitting in a in a downtrend, which I'm drawing for you. Okay, and so that's the downtrend as is currently sitting on a daily chart. And so we were looking, the first thing, thinking, okay, are we seeing like a break of this downtrend, or would it be respected and we have another move down? So anything could happen, and this is kind of a day like today is where these kind of things could happen. If we do, at the moment, there's been like this morning, there's been quite a strong move up. If we were to break, let's say 114, 113.6, where we're sitting right now, that could take us. It could take us down at the very least to test 117. Okay, and this could happen very quickly. It could even happen, as a reaction to the announcement, and then, even if the prices go back down, it could be a test of this thing. But once we break the 117, there's nothing there to to stop price from testing a new. So this is on the, on the hypothesis that we interrupt this downtrend, because as I always tell you, kind of we zoom out, but this is kind of daily trend. What about if we look even further and looking at the weekly or the monthly trends? So this is a different perspective now, because if we look at the weekly trend, we're still happily in an uptrend, that since August of last year, really. So that hasn't changed. This is just a correction if we look at the weekly, and the same thing if we look at the monthly chart. The monthly chart is even stronger. So even we haven't had any correction, any break in this since November of 2022. So I think there's still quite a bit to go. But in terms of where could things, the things that we look at, this was the previous kind of demand zone. If this was to be broken as a result of today, then I think the next zone is here. So if we break 107, then we go all the way down to 97. There's nothing in between. Okay, the same from the daily chart. This zone hasn't really been tested yet. We went close to it in June. This is from May, so this is the May demand zone. It's quite wide, from almost like 98 to 92.8. But if we were to break this, and like last week I was watching this closely because there was a good chance that would get broken. But the next thing, this would represent a really, really good purchase opportunity, because I think things have changed quite a lot. So and with doing this cycle, we've rarely seen corrections of more than 20%, and this would represent, so this zone goes from 21 to 25. So it could be a really good place for where the market could turn and reappreciate. But so far, so from where the here when the ETFs were launched, if we see the maximum move, so if we kind of look at the moment at the worst case scenario, so it's 33% this last year, and then in May was another 32%. So if we were, let's say, to do the same thing now, where would that take us? Would take us to here, which, fair enough, this would be like an extra, another demand zone, not as clean as this one, and it doesn't really, it just very interrupted. It's a zone that interrupted the downtrend. But I think I still favor this one, to be honest with you. But still, if you're really going to thinking, okay, if the same thing was to happen again, we could potentially go all the way down to the mid-80s. That would be a serious, a serious correction. At the moment we're sitting at, this correction that we're sitting on right now was made about 13% drop from the new all-time high. Okay, now a couple of things. Any questions so far before we go move on? No, I haven't looked at the. Where is my? Okay, so no questions in the chat. So another thing that you might want to keep an eye on. So one thing is we're talking about is the the non-farm payrolls today. There is something else today that could happen. Can anybody tell me what it is? I'll start giving you clues. I put the first letter. First letter is an M. Anybody? Second letter is an S. Come on, guys. Third letter is a, oops, T. No? Should be a pretty big clue. I think Jonathan got it. So it's MicroStrategy.
Is it MicroStrategy?
It is MicroStrategy.
Nasdaq. Is it Nasdaq or S&P?
So what could happen? Let's have a look if there is anything here. Oh, why is it doesn't want to do? Doesn't want to work. So what could happen today? I don't know. For some reason, this says it's not playing ball. Never mind. Try again. Ah, there we are. So today is a decision whether to include or not MicroStrategy in the S&P 500. So this is huge. Okay, what has happened behind the scenes is now that MicroStrategy fulfills all the criteria to be included in the S&P 500. Still, that is not enough. Now there is like the S&P. There's a selection committee that that discussed yesterday. When was that? No, actually, a couple of days ago. If to include MicroStrategy or part of the S&P 500 or not. Now, what happens if it does? What happens if it does? Well, if it doesn't, nothing really changes. Okay, so things can carry on as they have gone until now because there is no change really in this. What happens if it does is that then all kind of pension funds, investment funds that have got it in, so as they go as part of the strategy to invest in all the components of the S&P 500, will start buying MicroStrategy shares very heavily, because it's anything that gets kicked out, or the S&P 500 gets sold, and anything that gets to be part of the S&P 500 gets bought. Simply by even just the passive ETFs would bring a wave of buying pressure into MicroStrategy. And as a proxy of that, then that will mean obviously a lot of price being reflected in the price of Bitcoin as well, because MicroStrategy, or it's the largest corporate owner of Bitcoin, and so it could be one of those catalysts that could really spike the price. It could potentially get us to see a new all-time high, even in terms of the next 2 or 3 days. So these are kind of like some of the things that can really happen. So, and these are the conditions. Having a US domicile and deriving the majority of its revenue from the US, listing its securities on New York Stock Exchange, Nasdaq, or CBOE, having a market capitalization, etc., trading a number of shares, ensuring that some most recent 4 consecutive quarters earnings are positive. So all these are now true, but let's say there is this committee which is not a public, it's not publicly reported committee, must manually approve any constituents. So So it is, and these decisions are discretionary, and nobody has an appeal of, and they don't have to explain their decision to anybody. But so having said that, the two when I say okay, we just think about the two options. Either things go ahead as normal, nothing changes, or MicroStrategy all of a sudden shows a 10, 15%, maybe 20% price increase on the day that this announcement is made, and then it will carry on for pretty much the next 12 months. Not necessarily at that level, but there will be because pension funds they move very slowly. Okay, so they're not going to just jump and start on to buying MicroStrategy shares, but there's going to be as part of being in the S&P 500, and going to be a steady level of purchase happening in these shares. So
Look,
we'll see what happens.
question. Yeah.
Yeah, sorry.
Because I'm just thinking that S&P, a lot of like your mutual funds and stuff are one of the things they invest heavily in S&P. So if this happens, Bitcoin now becomes a very key player within a lot of, your investment. You're even not, it's not even EFTs. It's just your people that have, the mutual funds, right? I mean, they'll go and they'll have to say, okay, well, S&P is X. Do they just buy like pro rata through? I'm just wondering, in your mutual funds, when they say they're in S&P, are they in all the companies, or is it a proration of all the companies in there, or what?
Yeah, no, exactly that. Exactly that. So so it depends on each fund has its own set of rules. Okay, and the set of rules will determine what they're allowed and not allowed to do. Okay, but a lot of these funds have to be 100% invested. Okay, so if they are to be invested and the majority of it is in the stock market, a percentage go in all the S&P 500 constituents. In depth. So even in the S&P 500, the percentages are not all the same, and not the same percentage in each one of the 500 companies. In kind of like the top ones that got a bigger weight than the ones at the bottom. But still means that yes, there will be, Bitcoin will end up being pretty much through MicroStrategy in everybody's pension, so to speak.
Yeah. It's like disseminating it through it's not quite stealth, but it is kind of it's there and it's permeating. I mean, so it'd be interesting to see what happens with it. But yeah, okay.
It's also it's kind of like it's interesting to see the effects on the market, because when we think about the Bitcoin whales, people that own a lot of Bitcoin are talking about billions worth of it. Their tactic has been kind of like sell the top by, I'm not saying buy the bottom, but just wait. They force, in a way, big corrections, and then they buy the bottom of the corrections. But what's changing now is that because it's become more of an institutional asset, the corrections are not as deep as they used to be. So that kind of like, so we've seen over the past week, there have been some huge sales of Bitcoin, not coming from the market, but coming from times when the market is closed as well. So Saturday and Sunday. And so sums of tens of billions of Bitcoins being sold by whales, and all of that has been pretty much absorbed. Well, yeah, it's pushed down the price by a couple of thousand here and there, but it's pretty much been absorbed by the market as if it was nothing. So there is the money that's going into Bitcoin now through the ETFs, through the IRAs account, the 401ks, etc., is generally speaking money that's less elastic than it has been.
So it's more, it's creating a bottom. You're saying there's this underlying demand anyway. So
Exactly.
where they thought they were going to get the really big drops because everybody, let's say 5 years ago, was a lot more hesitant. They're not now, because you can see with the EFT, stuff, the uptake is really high. So everybody's looking, clamoring for money. So that system may work in the small term, but I don't know that it's going to, like it plummeted a year and a half ago. That's, unless the whole economy tanks,
Oh,
but
what's happening? What's happening is that the money that's going in now, it's not as short-term speculative money as it was in in all the other crypto cycles, including 2021. People that wanted to, just what was the acronym? Oh, what's the acronym? We all gonna make it. W WGMI. We're all gonna make it. WAGMI. WAGMI, that was the acronym I was looking for. It's not like that anymore. This is money that is there to stay for the long term. So it's less. So if somebody invests in Bitcoin through their pension, they're not going to watch that price every day and thinking of buying at 110 and selling 113. I'm not going to do that. They say, well, I'll buy and I'll look how it goes at the end of the year, and then maybe changes some. And that's the difference. Now we have the corporate Bitcoin adoption has passed 1 million Bitcoin. So over 1 million Bitcoin, which is 5% of the Bitcoin in existence at the moment, are now being acquired by companies like MicroStrategy, like Tesla, like companies that quoted in the S&P 500, sorry, in the New York Stock Exchange and Nasdaq. So over 5% of Bitcoin now is owned by these companies, and there's a big difference from 5 years ago, where maybe there was like MicroStrategy, there were a few of the Bitcoin miners, they had a bit of Bitcoin, but that was about it. Now it's lots of different companies that not just they're buying Bitcoin for the treasury, but even Ethereum and other coins. So they're looking at different different coins, not just. So it's starting to also percolate into the wider crypto market, and we'll see then which ones of the ETF demands is going to be approved first. But there's a lot of ETF requests that have been filed for a lot of different coins, from Cardano to Solana to XRP to Sui to you name it, Dogecoin, Trump coin, whatever. But but again, that can then open the institutional doors to more and more coins. And I think it's the kind of thing. So now that they've approved Bitcoin and Ethereum, if they'll approve the next one, pretty much I think they're going to approve a bunch of them at the same time. So as long as the filings are correct, we might see 10, 15 ETFs in different coins being pretty much approved the same week, if that happens. At the moment, the SEC is still delaying. It's delayed the Cardano, it's delayed the SUI application. They keep pushing it further, but now in October we get into the final deadlines where they have to either approve them or deny it. So summing up, I'm thinking we have a couple of things, interest rates that is changing. It could be MicroStrategy being approved in S&P 500, and ETFs may be approved at some stage in the next couple of months. So those are all like catalysts that can get this move that we're all waiting for to happen and for things to start moving quickly. But the biggest one of the lot for me is the Clarity Act. We were talking about it last week. So regulatory clarity, it's probably the most important thing for the really, really big players to, the Mag 7, so to speak, to start getting involved in crypto. The interesting is that all of these things are almost like, it's almost like War of the Worlds. They're all like converging into the same point at the same time. And I always felt that kind of we've been sitting here on the sidelines and being interested in crypto. We are maybe sometimes in danger of being too early in doing things because we can see things coming down the road. But when things do happen, they happen very, very quickly. So this is why I always say we're doing this thing because you need to be prepared for this before it does happen. If you start just getting interested when you see the signs, when you see Bitcoin go to 150 or something like that, it's a little bit late. This is at the moment when there is uncertainty, when people are scared and there are some sell-offs, overnight that you see of, it might be 3% in Bitcoin, it might be 10% in smaller coins. Those are the times where really you can make generational decisions or generational wealth, because when they start moving, and if Bitcoin doubles from year on, that would mean that lots of coin will grow 10-fold, 20-fold, and that's where, but you need to be in position now, rather than wait, because every extra 10%, 20% you need to buy the smaller coins reduces your earning potential long term. Okay, let me see. There's somebody chat. We take a look at the altcoin market on the daily, weekly, and monthly charts. Yeah, please. Okay, let's go and have a look at that. Thanks, Ray. All right. Wait, what am I looking at that? Okay. And by the way, today Bitcoin is performing nicely. 109 to 113 so far. Okay, that's up there. More of the same. So let's have a look at the altcoin market. Okay, so this is where we're sitting so far. Okay, so we're still very, very low, even compared to end of last year, December of last year. So this is just December 2025, okay? At the moment, we're sitting at minus 34% compared to December, and even more compared to the all-time high, which was in, where are we? Which was again in November 2021. So we're looking at minus 40%. So Bitcoin is, remember, from 70,000 in the same point, now is 110, 112. So over 50% above the previous all-time high. So let's do it on the weekly so it's a little bit clearer. Okay. So it's a similar chart as we saw in Bitcoin. The difference is, that where, this moment here, which is where the Bitcoin ETF was launched. Okay, so this was in January 2024. And you see the initial excitement. So this doesn't include Bitcoin, but you can see that when the ETS was launched here in January 2024, there was an excitement even in the altcoins, but they haven't had, obviously, the institutional pressure that Bitcoin has had. So at the moment has been, you can see when I say the moves can happen very, very sharply. See, November to December, there was an increase of 138% in 1 month. In the all coin market. We're not just looking at one coin, but this is the market as a whole. So this is, I remember this one is the crypto market, the total crypto market excluding the top 10. Okay, so excluding Bitcoin, Ethereum, BNB, Solana, Cardano, and all the others there, Ethereum, all the others that form the top 10. So we can see that, and there's been like we went from kind of big moves, so we're still in that big move when we look at it on the long-term perspective. So this is the when you say really look at things in perspective. This is the trend on the monthly chart from from the smaller like the smaller coins. So at the moment, we are still in an uptrend, but at the moment, so we have done a big period of growth that lasted a lot, quite a lot of months. Then a big correction, and then a new high. And now we made a higher low compared to this, you see, from 146 to 176. So it didn't drop as low as previously. And now we are in the next phase. Now, the next phase still needs to play out. What this tells us is that the next, so if the uptrend continues, then the next move that we're in right now should provide us with a higher high. So we are now at 300. To get to a higher high, we need to go beyond 455. Okay, that means that we're looking at 50% increase to even without making an all-time high. Okay, that will be even higher. But I'm looking at this that from where we are right now. We're looking at 52% simply to be back where we were a few months ago in December. Now, if what I'm saying, when things start growing, really, when we are in the really, really bull market like we did in 2021, so this was the move in 2021, okay? Started in October 2020 and ended up in November 2021. So you can see the number there, 1,300%. Okay. So, and this really happened in about 1 year. And we're not looking from, I'm not looking from the bottom of the market. There will be a lot more than that. But we're just looking here from when it really started accelerating. So if we were to do the same thing right now, I can see where is it that we may be starting to accelerate. Okay, and so it could be like this current move from here. And if we were to get to, let's say, even doing just what Bitcoin has done so far, it would be 50% above that, would be like 750 roughly billion. Something around that. Simply to do what Bitcoin has done, which normally this wouldn't be expected to exceed that, but so just keep things real, okay, without getting overexcited. But simply to do what Bitcoin has done in this cycle would require a 327% from the bottom. And if we move from where we are right now, that still means 151% from right now. What really, if we should guess and project this sort of move, when we do this, it pretty much probably the most important number is this is the Fibonacci numbers. Probably the golden ratio, the 1,618, that will sit at about 100 million. So it would be a quite a decent target to hit, at least as a first stage, and that would be from where we are today. It will mean 165% growth. So basically 165% growth means things more than doubling, 2.5 times where we are now. So not bad, but again, I think personally, so this is a matter of where can we expect things to go in this current move. So This will be really, for me, more realistic, because it's again here I've measured just from the beginning of the strong move, not from the bottom of the market. Okay, and again I will say the moment that things started growing a little bit faster was from beginning of July here. So if we use this, then that pushes up a little bit closer. It gets us closer to the 1 trillion mark. Okay, and that will mean, so you see what a little different perspective does. So that will mean a 300% from now. Oh, sorry, from the beginning of this move. So from now will be 215% from where we are now. So you can see sometimes, you know what I said before, like it's better to be prepared now than wait, because look at what difference it makes if, for example, you bought a basket of coins at the beginning of July, as opposed to buying them now. That will make a difference in, if this was to happen, a difference in results of almost 100%. You're only getting 200% instead of 300. Still, it's still pretty good, I would say. But getting things at a bargain price, so to speak, when other people are fearful. Look at this, for example. Again, going back to November 2024, we bought it then that would mean 400% instead of 200% as we looking at now. So it's just a matter of trying to, at the moment, we're kind of playing with numbers. These moves haven't happened yet for all coins, but it is, the kind of like where I look at every week. I'm thinking, okay, where could we end up? Where could we end up being? Especially when we get some of these, some of these coins being used, being used for real life. Real life examples. I think we could. I'll be surprised. I would be surprised if before the end of this cycle, the all coins don't get close to the 1 trillion mark. I would be surprised, to be honest with you. But we'll see. We'll see. Hopefully that answers your question, Ray. That's the kind of like the long-term thing that we're looking at. And obviously the bottom of the market was where August last year, so about 150. If we move below that, then then that would be a kind of we're going to form a new bottom. But at the moment we're still, although they are very, very big moves, it's still playing out. We're still in kind of the bull market, waiting for the next big move. But by the way, this is an interesting thing. Another thing I can show you, and how you can try and capture some of these moves. And this is where it becomes interesting. So if you look at this, you've seen the market has made all of a sudden, from making lower lows and etc., starts making higher highs. Now, when you look at this, so we're looking at this place. The market is making a new high and then slowly starts retracing. When you look at it, I'm thinking the last time the market made a very, very strong move and created a new high, went from 200 billion to pretty much like doubled in a matter of weeks, was down here. So what about if the same thing happened again? This is how we kind of defined kind of demand zones, that depending if you want how aggressive you want to be, if you consider the whole area, or if you try to capture a little bit more. And this is how you then capture these amounts. I mean, in this case, you can see the volatility actually broke this area, but it stopped. So it went beyond, but at the end of the week, it stayed exactly within this range, because price has a memory. So price remembered you know what? Last time we were down here, we made a lot of money. That's what it's telling us. So there's a good chance that, again, if we buy down here, we make a lot of money again. And this is again, it's created a new bottom, and we again retested it, and now we're trying to move higher. I always like to remember that this is the kind of the bottom line. If we go beyond that, then it's big problems. Okay, because this is the line in the sand. If we are in an uptrend, this line should never be broken. And we didn't go anywhere near, so it's perfectly fine. But this is interesting. I'm thinking, okay, this should be, if you're interested in altcoins, then you should be looking at that, and you should have that drawn in your chart, because it doesn't necessarily, you can buy this index. It's just an index. But if you know that the price is in this range, you're thinking, okay, I'm in the buying zone now. I want to buy Solana, I want to buy whatever it is, Ethereum, then this is a good place to do it. And the risk, it's a lot lower than if you bought it up here, because you think, you know what, I buy down here, and if the price moves lower, then I can, I can actually cut my loss down here. So there's only a little risk. But if you buy up here, then there's a big risk. If the price starts moving down, you lose, over half your investment were here. Yes, it still hurts, but you're only losing about 20%. Okay, any more questions? Nice to see you, Janet. Let's see, you're in
Ireland right now.
I could see
Yeah.
the difference in background.
The daylight.
True. Okay.
Yeah, that was really interesting. Thanks for that. I mean, as you go, I'm still learning. So that last section was really insightful there now. So again, absorbing before taking action.
You know what? We were making a really interesting discussion the previous hour, talking about, a long-term portfolio, long-term investing. And we were talking exactly that, about zooming out. Sometimes we get lost into, oh my God, what's going to happen tomorrow? But if we're going to zoom out, we're thinking, you know what, it doesn't really matter, because long-term, I know where I'm going, and I know that this is going to be good. So it takes away a lot of the anxiety as well when we can take a long-term look at things. Okay. Anybody else? Okay, guys. If there are no more questions, we can finish a few minutes early. I'm available if all of a sudden you get spark. I forgot to ask that. What about that? So I remind you that kind of the things to look at in the next few days. Today, see what happens with the job, non-farm payroll in a few hours, or about 3.5 hours from now. And then in a couple of weeks, we have the interest rate announcement. But that decision about the MicroStrategy, could happen at any time. They don't have to announce it any day. Today is the earliest day that could be announced. Doesn't mean it has to come today. But if you see something happening to MicroStrategy overnight, you can see the price all of a sudden jumping, by a big chunk in literally a few minutes, then you'll know why. And yeah, no, apart from that, at the moment we're still sitting ducks in a way, just waiting for bigger things to happen. And you know what, recently, Donald Trump is having pretty much like all of his decision being challenged in court, and he seems to be losing case after case after case because he's also decided to pretty much go against trying to ignore the decisions of the court. So I can imagine that, in general, the judiciary is not well in his favor, but it is, there's a lot going on right now. And there's another thing that's interesting. We'll see what's happening across the world. Generally, I know the US hasn't started cutting interest rates, but other countries like the UK have. The UK has, has cut quite a lot, but the interest rate on the bond has actually gone up rather than going down. The same thing is happening in the US. So there is very little faith, so to speak, that the government, central banks are going to be able to control the economy. And there is almost like an expectation for some of the proverbial to hit the fan. We'll see what the next few months will bring. So we could be in a place where there's like excitement because there's all this cash that floods the market again. At the same time, inflation starts pushing up again, and companies don't feel confident in investing more and start laying people off. So we could be going towards a period of what is called like stagflation, stagnation and inflation at the same time. So let's see. Interesting time now. And from now until the end of the year, we'll understand a lot more about what's going to happen in the next, say, 18 to 24 months. But the moment is anybody's guess, and this is the reason why we see that much volatility in the markets. The markets don't like uncertainty, and any whisper, any news or anything like that gets overblown in a way, and there are some really sizable effects. Okay, but long term we'll see. We'll have another look at it in the next couple of months as we know exactly what's happening, if these tariffs are happening or not happening, the inflationary, the non-inflationary, or if the UK and the US are going bust or not, which could be an interesting scenario. Okay, but in any case, if you're in the UK at the moment, you could get about 5.7% investing in UK government bonds. Even as the interest rates have been cut. So yeah, interesting world we're living in right now. And where the kind of the UK and the US, almost they are more desperate than for money than countries like Italy or Portugal, Spain, or interesting place. Okay, all right, guys. So at the moment, we'll end the call here. So you know where I am if you want to ask any questions anyway. And we'll pick up where we left off next week, and we'll examine some of these things that. Thanks, Jonathan. Jonathan has posted the link to this Cardano Q&A. Jonathan, if we can catch up later, if you're free after lunch, when we'll have a chat. And yeah, as I say, let's wait and see what some of these announcements bring. And until the 17th, it's all to play for. Today we could have a push. We could see the crypto Bitcoin price in particular having a break on the upside or a break on the downside. I think both options are in play. I can see for myself that maybe the upside has got a little bit more probability than the downside, but anything can happen. Okay, so be light-footed if you are investing in the market. Okay, be careful. Okay, see you. Have a great weekend, everyone, and I'll see you again next week.